things look a little better for bonds this morning in the sense that there's we're not seeing yields moving quite so aggressively to the upside. We're not seeing the bonds sell off in any great degree this morning. Is it over? Have we done with this particular story for now?
But probably, good morning. The volatility is there to stay. We are looking this morning to Australia and New Zealand, and it's looking like they are posting their second day of decline in yield. I think that last week was a bit of a roller coaster. We had increases that were to some extent related to excess supply and indigestion by buyers that is related to what you said. So to the fact that it's not sure how central banks will react to new inflation printings. While on one side, Clarida, Jerome Powell and Williams have reassured the market that in the United States, the monetary policy is not going to change. We are waiting for the same kind of response from the European Central Bank because we think that this is extremely important to give this kind of reassurance to maintain the financial conditions stable. That is what financial markets are looking for.
And so we'll see if we get an update on the thinking from the Fed this week. We are going to hear again from the Fed, and we watch what other central banks are doing, as you mentioned, Francesco. I wonder what are the levels that you're watching for on bond markets that really matter? At what level do you start to think that equity markets look expensive? Is it about nominal yields or is it real yields? Because we've seen a tick up, of course, in recent days in US real yields.
Of course, the answer is for both. Already at level of the 10-year Treasury, around 1.5%, which is what we saw last week, we have already shown that the equity markets will suffer. Because from the valuation point of view, equity markets are coming from 2 years of multiple expansion, so they are extremely vulnerable to interest rates. Said that, I think that until when global growth will recover, the headlines in terms of vaccine, in terms of COVID cases will continue to improve, this will likely overcast the valuation. But it's important to acknowledge that this is related to this acceleration in growth momentum. When this is going to dissipate, perhaps the valuation will be back to be stretched at this level. So already at this level, I think that there is some tension on the equity markets. So we need to be extremely careful from now on.